All right, very good morning to everyone that have joined us already today. Sorry for the slight delay for the launch of the session. So give me just 1 minute before we let more people stream in from the Zoom, because I think we just launched only. So I'll start shortly in around 10:33 a.m. Yes, thank you for letting me know that you can hear me clearly. So during the time, if you all find that you cannot hear. All right, so I will start off with just some promotions that we have while we wait for people to join in for us through Zoom. Right, so today, thanks everyone for joining us this morning. Right, so not only do we have participants from Zoom, we also have launched this session on YouTube Live as well. Right, so may have viewers from both the Zoom and also YouTube itself. Okay, so currently we have a refer a friend promotion where you can actually scan this QR code to key in your account number. Then you'll be generated with this refer a friend link, which you can send to your friends and family members. If they do open an account and qualify for the criteria, then you as a referrer will get $68 per account that you refer, up to $680. All right, so this is the promotion that we have. So do share with your friends and family members if you have. Those are interested to trade. Next, we have a share financing rate at 4.8%. All right, so currently the margin account we have, not only do we have a cash plus account or a cash management account linked to CDP, our margin account have an attractive rate of 4.8% financing for Singapore dollars. So if you do actually trade on a higher yielding counters like the banks or the REITs itself, or you find that the current price is quite low, you can get a positive carry by using margin to increase your exposure while you are actually looking to do any short-term investment or even long-term planning. All right. Next, we have this very attractive promotion, which is the key for today. Today, we are talking about the UBS, the DLCs, the function itself. And so the promotion is that this new promotion will start from 1st July to 30th of September. So as long as you have not traded on the UBS DLCs before, from 1st of April to the 30th of June, you qualify for this promotion once you trade two trades for the UBS, two buy trades for the UBS DLC. And then by qualifying, you will get $108 cash credit at the end of the promotion period, which will credit to your account, right? But this is only for the first 150 clients itself. So it's actually a very, very attractive promotion if you want to try out the instrument of DLC after you have listened to us discuss about the instrument today, right? Next, we do have this free SGX market access for the market depth. All right, so this you can apply through the Poems platform on the rewards tab itself. Okay. Also, we have a Telegram chat that we have from our center, Phillip University Center. If you join us through the QR code, we do share our weekly or daily updates over at the Telegram itself. You can just join us. We also share some of the events like this one, upcoming that we have. So next Saturday also we do have the Singapore Strategy and Stock Pick at Raffles City Tower itself, and we also have it out on Zoom as well. All right. Okay, without further ado, let me just start to today's session. All right. So today we'll talk about the DLCs itself, but mainly on my part, I will share more of the Hong Kong outlook and also some of the tech counters that we have that you can be interested in for the China side itself. Okay. So for market trend itself, you can see that the Hong Kong market itself actually started off at a lower point, all right, at around 14,800 in the January period. And this is only 200 points away from the October low of 2022 of around 14,600. So of course, it has already rebounded quite fairly. And in May, and near end May, around 20th May or so, the highest point was around 19,600. So that's a very big rebound. Of course, right now, as of yesterday or as of 27th of June, right, it have dropped back down to around 17,700-ish. Right, but year to date is still around up 3.9%, which is a fair performance comparing to the international markets, but very far off from the US bullish market for sure. All right, so of course the Chinese government have launched various policies to try to stimulate the stock market at the start of the year, from the start of the year onwards, and then they also mentioned that they will issue this 1 trillion yuan worth of the ultra long treasury bonds, 3.9 trillion yuan worth of special purpose bond (SPB) for local governments. So all of this is just trying to show how strongly the Chinese government wishes to stimulate the market, but it also shows that the economy is weak enough that the government need to have such a very strong stimulus to try to kickstart the market again. All right. So the PBOC also reduced the RRR by 0.5% along the way in the start of the year during the first quarter. Okay. So of course, if you also followed last year, end of year, they had some draft regulatory processes, policies that was actually not implemented because of the feedback and also the lashback onto the stock market itself, where the tech stock actually dropped fairly in December. Okay, so for the first quarter itself, you can see that Hang Seng have already dropped 3% and Hang Seng Tech dropped 7.6%. However, if you compare to as of 27th of June, the 3 months performance, you see that Hang Seng Index have rose 7.1% and Hang Seng Tech rose 3.2%. So you can see that this actually shows the rebound of the first quarter. So which is actually in, what I mentioned just now in the May, highest point was already much higher than the current point. Okay, but the second quarter was a good quarter for the Hong Kong market itself. Okay, so how do we look forward to second half of 2024? You can see that the geopolitical tensions, right? So the Russia-Ukraine conflict is still ongoing, even though it's already less on the news headlines, right? But the impact to the energy industry, because there's some like different attacks to the refinery and everything. So I think the impact is still there, and to Hong Kong China side, right, it still impacts to their cost of energy itself, and also there's an impact to the agriculture supply chain, which actually China do also get impacted due to their close proximity to both Ukraine and Russia itself. All right. Then next we have the Russia-NATO tensions. So there is a potential escalation in conflict, especially if the Russian-Ukraine conflict is ongoing and continuation without any clear signs of progress. All right. Then also the cyber attacks is escalating between both parties, both sides that they're blaming each other for cyber attacks, and that actually potentially impact the business sentiment in the region itself. All right. And also, of course, there's the different sanctions of Russia. Okay, so for this particular point on sanctions on Russia from the Western world, all right, so there is a split views between that for the impact to China, because of course it's difficult to operate in Russia in that sense. But for China itself, they might actually benefit of Russia is forced to actually collaborate more with China in the sense of the trade and in terms of importing certain resources that they need due to the sanctions that they cannot get it from the Western world. Okay. Okay, next we do have the EU-China tension. So if you have followed the recent news, there is a tariff imposed on the China EV market. All right, so it's as high as 48%. All right, and then this actually impacts this China's EV market very strongly. All right, and also the issue is that not only now China cannot import to Europe, the fear is that whether there's any retaliatory actions by China itself onto Europe, and the German market and German or the Europe market actually do also have interdependence with the Chinese side itself, and more highly correlated would be the German car industry, where they actually have a very strong export to the China market as well. All right. And also, some companies also do manufacture their parts in China, which also might be affected. So, companies that have manufacturing in China itself will be considered as export from China into Europe, and they'll be subject to the tariff itself. So, even companies like Tesla, if they actually export from China into Europe, they also are subject to the tariff. All right, so potential retaliatory actions, like I mentioned. So right now, one of the mentioned or one of the raised to review tariff is actually China tariff on the meat imports from Europe or from different part of the world, not only Europe itself, but mainly on Europe currently. And this review will end in 2025. So that might actually impact some of the countries or Europe itself. Because I think Europe is four of the countries in Europe are the top 10 meat exporters into China, right? Okay, next following up, we do have a US-China tensions, right? So this one is ongoing, it's always been, and then the US elections upcoming in November actually might impact the relationship in 2024 and on subject forward, right? So right now, the two different main leaders in the election run for US is Biden and Trump. So if Biden continue to win and there is a divided Congress, then it might actually lead to a more or less status quo that we expect for the US-China relationship. All right. However, if Trump actually wins the election, of course, then there is a lot higher uncertainty due to how you see Trump actually release his policies at the start of his first term itself. All right. So next thing is that US also continue to the efforts to slow down the China tech developments through the restrictions on the semiconductor and IP access to high-end technology. So on this aspect, not only now US is trying to restrict the US companies to export to China, they are also putting pressure on their partners, especially those in Europe itself, also to pressure onto them not having to export certain equipment to China. So the country that's involved, it will be actually mainly like Japan and Europe itself, where they have certain infrastructure that's required or technology machinery that is required to do this tech semiconductor manufacturing itself. Right, so of course there is a very fine balancing act because the US and China do have a very strong overlapping interests in terms of US do rely on China for certain minerals as well, and certain of these minerals are required to actually do and develop their EV market, especially the battery side. All right, so there might be a different type of balancing act between how US and China do manage their relationship. Okay, so this is just the uncertainty involved in the Hong Kong and China market due to the US China tension. Next is that the currency pressure coming in. All right, so of course the US only now show 25 basis point cut, and that is down from the initial start of year. We always look at around 3 to 4 cuts, so that's around 75 basis points. So it's a sharp drop. All right, and then there's a slow progress in the US rate cut, and then coupled with the US interest rate cut themselves, and then the pressure of their economy, having to actually pressure the PBOC to potentially use the tool of rate cut over at their end. So if they do actually cut rates on the China's PBOC side, what happens is that there'll be a widening spread of yield between the US and China, and that is actually detrimental to the yuan's performance, where you can see yuan actually dropping or weakening against the US dollar continuing, right? So that also give more pressure onto the renminbi's denominated assets as well. Okay. So of course, there's certain tailwinds that we look at where there's deflation concerns easing off in the China side. All right, so the stock market rescue package also starting to try to come in. Not only do they rescue the stock market directly, also the property sector itself. They have certain new policies to try to help the industry or the economy try to recover. So one of the main angle they're looking at is trying to support the residential or the property sector. All right, which will actually flow over to the other segments of the economy itself. Okay, so you can see the deflation concerns itself. All right, we can see that the China's manufacturing PMI have slightly dropped, right, 49.5 on a month-on-month basis. However, the non-manufacturing PMI as well as the CPI have still is a positive trend, 51.1 for non-manufacturing PMI. And then CPI is still positive, so there's still inflation ongoing, right? So it's slowing down, right? The PPI index is currently falling at a slower pace at 1.4%, all right, compared to the 2.5% contraction in April, right? So a lot of the price drop itself, right, that they say is in China, all right, for the producer price index, right, it might be due to the commodity prices going up, like your gold and other minerals and other precious metal. So it's not really a domestic demand increase that help the support the prices itself. So in that sense, there is still the pressure, but by the expectations of the oil price and all the other minerals or raw materials, the prices are looking to continue to have an inflation trend in the second half of the year. So that should support or help the China contain the deflationary risk itself within the economy. Okay, so it's a disparity lah, because of course in China it's not all across board deflation, right? There's certain aspects of the market that's actually facing high inflation as well. So it just depends on which is the consumer or the industrial type of aspect in terms of the calculation for the deflation and inflation numbers. Okay, so of course, stock market rescue package, the PBOC, they also have announced a 300 billion yuan facility to fund bank loans to help state companies purchase completed but unsold property. But however, a lot of people mention that this is actually a limited size in terms of the rescue package, and also the risk of the non-full implementation, because maybe some of these the state companies might not be very incentivized to actually buy off this property itself due to the valuation involved. All right. So they also remove the floor on mortgage rates and also encourage local governments to buy the homes to convert to affordable housing to give to the citizens. And they also cut the minimum down payment. So all these are actually measures to actually support the property market itself. Okay. So let me just zoom on to three special examples that we might look at. Right. So of course, with the backdrop of all those I mentioned just now, that you can see the China's economy still might not be as a rosy spot compared to the US market. However, there's also these tech giants that are doing very well and are still very worth looking at for both long and short opportunities, which actually you can do through DLC. Right. For one of them is Tencent. Right. So Tencent actually have a very strong improved regulatory and business climate. That's positive. So there is no more the regulatory less not say no more less regulatory concerns on restrictions on them, and then their new game actually is launched, and then it has showcased their strong demand for new games that they have, and then the earning power for Tencent. And then the fund inflow is expected for them with the game segment's resumptions of growth, meaning they can release more new game titles, right? And then advertising segment also see improving in terms of their business revenue itself. Right, so to watch out for Tencent, if you want to look at looking to long or short, okay. So one of the key factors would to look at whether they have a new game releases, what is the ad revenue numbers that they are displaying or publishing, and that might actually help Tencent in the short term or the second half of this year itself to navigate this economy market itself. So next we have Xiaomi, 1810 Hong Kong, right? So it's actually recently, instead of only phone, if you have seen the news itself, they actually started offering EV, electric vehicle, and their EV offering is actually quite highly demanded, right? There's high sales numbers at the launch itself. So it's actually boosted their share price because of this aspect that they managed to successfully encroach into another industry, which actually might be offering them certain synergies that they have. And they still have a very strong mobile phone sales and outperformance in the EV delivery. So it's as fast as break even for EV segment in 2026, 2027. So that is a very quick break even target that they have if you compare that to the other smaller scale or the smaller companies that are just pure EV firms. Right. So if you want to monitor for the performance and trade on Xiaomi in the industry itself, right, you can look at the smartphone numbers and the gross profit margin. Because of course, now that they have the EV itself and launch itself, there's a very strong competition in EV market. So even though they might have very strong build out of brand awareness through the EV launch, but the gross profit margin that they have from there might not be as significant as it might seem due to the high competition that we currently see in China for EV market. But of course, they also have their international market for the smartphones, so that is actually worth monitoring at. Okay, next we do have the new energy vehicle, right? So BYD, right, one of the sales champion for the China market. So they are the sales champion for 2 years in a row, and they actually surpassed 3 million annual sales target in 2023, and that is roughly around 60,000 cars per week sold. All right, so the target is for a 20-25% sales growth in financial year of 2024. Okay, so you can see that the earnings growth is also outpacing the auto industry's average itself, right? For the performance itself, so they actually are realizing the increase in delivery to the actual earnings growth. However, the thing to note for BYD is that at the stage that they already had performed at in 2023, now in 2024 itself, you can see a lot of margin being squeezed. So first is that there's price cut, there's a EU tariff, there is a higher competition in China market itself. And actually one thing to note is that in recent weeks, what the newer publishing numbers that they have shown is that they only sold around 45,000 to 50,000 cars per week. So that is actually a drop from the 60,000 average, which you must maintain to actually get the 3 million sales number. So if they actually drop, it's very more unlikely that they can exceed the 3 million target for 2024. and that might actually hinder their performance and their target of the sales growth. Okay, so one thing that they have in their ammunition is that for the first quarter of 2024, they did not really control the R&D spending and also the SG&A expenses. So meaning that they did have a very, very high R&D expense published in first quarter numbers, and that can actually be controlled quite easily by the company. So in that sense, BYD do have a lot of ways to boost their earnings performance for the investors itself. So this is actually worth looking at for both long and short opportunities. Okay. Right. Next up, we do have Bini, who'll be sharing more on the technical aspects of the counters that I mentioned just now, as well as some of the performance of the market indexes. Right. So Bini.
Thank you, Hanzi. Hi, good morning. This is Bini here. Thanks that you guys are joining us on a Saturday morning. So I'll be taking about 20 minutes, 15 to 20 minutes or so to talk about the technical aspects of HSI and Hang Seng Tech, as well as the few stocks that Hanzi covered. All right, so a bit of a disclaimer here. Whatever that's covered would be purely educational. And as I said, we will be looking at the technical aspects of the 5 different counters here. And later on, Alvin will be sharing on how you can tap into this 5 different counters using DLCs. And just a brief introduction on myself. I'm an XGX Academy trainer, and also been speaking for Phillips Securities regularly, and for a lot of other events. So my specialty will be in looking at price chart, technical analysis, as well as I do quite a lot of different instruments, whether they are stocks, indexes, futures, forex, commodity. And I love auto trading. So today I'm just going to share a little bit more on how you can use a very simple technique to look at the current Hong Kong market, especially some of the stocks. Okay. Well, you do also find me regularly featured in the newspaper and sometimes on the news as well. So basically on comments on what I think about the market. All right, so let's take a look at one of the key news this year for the China economy, because these will directly affect the stocks as well as the Hong Kong market. Around April, there was a release on the China's GDP, and the first quarter exceeded expectation. And this pretty much led to quite a huge rise in the Hong Kong market. But we've seen the movement coming in actually during the start of this year. That means that after hitting a low around Jan 2024, the Hong Kong market started to rebound. All right. I think the key question will always be, since it moved up, but right now it is in its corrective mode. That means that right now it is coming down. Is this the resumption of the poor performance that we've seen for the past 2, 3, 4 years? Or is this a buying opportunity? I think this is a very important question that I want to offer a little bit more on the technical point of view to answer this question here. So on the left side would be the weekly chart of S&P 500. We know that the US market performed very well. A few things to guide in terms of how to look at this is that the price movement is going up, but more importantly, I'm looking at the moving averages. That means that if you take a look at the moving averages, which is very clear, that moving averages, both of them been going up. So what is the use of moving averages, right? So that is to let us know generally what is the trend. So if the trend is heading up, we do see the moving averages going up. If the trend is heading down, the moving averages are actually heading down. The right hand side would be where the Hang Seng Index is showing right now. So very clearly the moving averages are heading down, and it's red in color, so that's a very clear downtrend. Right, but if you take a look at the US market, always the concern would be, since it's heading up, when will it correct? Okay, and the question for the Hang Seng Index is that since it's moving down, is this a buy low opportunity? Okay, so let's take a look at the Hang Seng Index, right, from a perspective of 20 years. So what I've done is to look at 20 years, right, of data here. If you take a look at the blue trend line, the line that I've drawn, then yes, it seems that Hang Seng Index seems to be hitting a low, right? That's being given by this blue trend line, so which is a technical level. So it just bounced off this blue trend line during Jan 2024, right? So that's the first quarter of this year here. Right. So in terms of a look at this, I would think that yes, although that Hang Seng Index declined by more than 50% since the high, all right, it is still in its major 20-year uptrend. Okay, so because we know that stock index are positive drift, so in this case here, it's one of the worst performing index, but it's towards the low of the range. Now, why do I say that it's towards the low of the range? If someone is to buy, for example, into Hang Seng at 32,000, 33,000 during 2018, 2019, the portfolio would be down about 50+%. So in other words, if you're looking at buying into the Hang Seng, then you are buying at a cheaper rate of about 50%. So that's like half price of anyone if they would buy, let's say, during 2018, 2017. Okay. Now, but if you take a look at the nearer term view, all right, nearer term view, then has Hang Seng moved out of the downtrend? I would think that if you look at the broad view, that means that a horizon of a 1 to 3 year price horizon, then the Hang Seng is still deeply in a downtrend. But in the short term means that probably in the 3 to 6 months, we do see some rebound coming in, right? Take a look at November 2022, the one that I highlighted that went up by 55%. From the technical point of view, what I did is to insert two moving averages. One is a 21 EMA and the other one is a 55 EMA. So these two moving averages as a set, they are very good to give you a perspective of the short to medium term outlook technically, in a way to let you know what the prices are probably going to do in the next 3 to 6 months. Okay, so with this view here, what we saw during 2022 was that price moved up after the moving averages flip. I'm actually trying to find my pen here. So let me just see whether I don't have a pen. Okay. But anyway, it's near to this point here where we see an intersection of the moving averages from red, all right, it changed to green, and that's where I said that the moving averages flip, right? When it flipped, it suggests that the price movement, which was bearish, flipped to become bullish right now. So this is a very good indication for a change of trend, right? So we've seen that during the late 2022 to early 2023. Now, from there onwards, you start to see the moving averages actually heading downwards. But again, what we saw in the early 2024, which is this year in Jan, Feb, and March, all right? The moving averages starts to stabilize, the prices start to stabilize, the moving averages starts to flatten out. But because of the GDP improvement for China, there was a rally in the Chinese market, and then price moved up from about 17,000 all the way until about 19,000. And that's where the moving averages again flipped to be green, all right? So that's giving us a bit of a clue that from the technical point of view, short term, we should be seeing some bullishness here. Okay, the only thing is that what isn't too pleasant for the market is that price is dropping. But if you take a look at price movement, it will always move in a series of up, down, up, down. That means after up, there is a bit of a correction. Not to mention that overall, the Hang Seng market is still in a downward move. So in a way that if you take a look at a retracement technique, which is to buy after price moved up, but to buy after price retracement, then what I did is to calculate into the support level, and that's around the region of 17,200. So we've seen Hang Seng closing about 17,700 yesterday, all right? So it's quite close to the 17,200 that I've predicted. that would be a very strong support to look at if there should be a rebound from this point onwards. And what I did was during a May, all right, I did a video, all right, during May, right, was to say that the Hang Seng Index has finally reversed, right? So if you're interested to watch that video, you can scan this QR code or just take a look at the address and then to view that video, okay? And from there onwards, all right, after May, all right, it moved up. So I'm expecting that if this wave could rebound from 17,200 plus minus around that area, it might have a chance to move to 20,000, or in fact, right, to follow what happened during the early 2023, the moves up at like from the low about 50%, and that would hit a target of 22,500. Now, all this will work on the assumption that there is a rebound around this point of time, which is about 17,200 plus minus around that area here. Okay, now how do I determine whether this is a good rebound? All right, it's based on support resistance, because you have to look at the starting point of when Hang Seng moved up, right? It moved up because of a change in the economic performance of China. So people get a little bit more bullish. All right, so it means that those people who managed to enter around May, all right, that would be having a huge gain, about 2,000 to 3,000 in a short period of time. So I want to know that going to that same price, which is about 17,200, will that be a rebound? Okay, because we did see improvements in China GDP. So this is naturally a point for investors to be waiting. All right, so this part of our like psychology. So if there's like a huge move from a 17,200 to 19,500, so let me just wait to see at 17,200, and that would be like a bit of an attractive price. Okay, now going into Hang Seng Tech, so this is one of the tech index which I think is still okay, but as I mentioned, generally, if you take a look at the blue downsloping line, the general trend of Hang Seng Tech is still down. Okay, so have to bear in mind that I'm looking at the short-term view, all right, of the price movement in line in a major downtrend. So if you look at that, then if you take a look at the short-term moving averages, then yes, it has turned to become green color. It has flipped also for the Hang Seng Tech, and the support level will be found around 3,006, right? So we saw that Hang Seng Tech closed about 3,550. It's actually very, very near to the support level. So we need to see some rebound from here. If we see some rebound from here, then there might be a chance that it's going to move towards the 4,100, 4,600. Again, that because of that long-term view, that downtrend is still there, then I would think that it's more towards a short-term trading. So it's not to be looking where you expect a performance that what happened in the US, it just hit a support level and keep going up, because that's how a bullish trending market should behave, right? But Hang Seng is not. Hang Seng is still in the downward movement, all right, in its major trend. So I think that it should be a short-term trading. All right. So what is the theme of today? As I said, right, there can be stocks that we are looking at, but I'm more interested in stocks, okay, that is also showing this bullish flip in the moving average. That means that it has become like from the red downward sloping moving averages to become a green, flip upwards, where the moving averages are supporting the price movement. So first would be Tencent. Okay, so I first talk about Tencent in my video. Again, if you're interested to know how I spot this, then you can just go to the YouTube, because I do publish a lot of videos on timely videos, right, on the price movement of indexes and stocks. All right, so what I did was during this arrow here, when Tencent was about 304, all All right, I spotted the flip and I talk about how to trade this in my video. And from 304, it went all the way to $400. Okay, so that was a huge, impressive move. And I talk about it even before it moved up. Right. So as one to say, because of the positive development from Tencent, especially the early release of Dungeon and Fighter mobile game, right? And it's one of the highest downloaded game in the Play Store. So price moved up. Okay. And since from there, the moving averages flipped to become green. That's a bit of a consolidation here, but if you look at price movement from 300 to near to 400, of course, it needs to consolidate where prices needs to attract new buyers to come in. So it's not surprisingly, we see some consolidation here. And the identified support of Tencent, it's around the green zone that I map in, which is around 360 to 340, which is actually around the price right now. Okay. Again, that you should be looking for some positive price action here to conclude that it had completed its consolidation. And with this, we should be looking at some short-term levels towards 410, 460, and all these are all short-term tradable zone. Okay, so they are not for holding long-term, but short-term tradable zone. All right, so that's for Tencent. Let's take a look at Xiaomi. I also covered Xiaomi. I also did Xiaomi in my video. And one of the reason for covering Xiaomi was because of it's going into the EV. So let me just offer a little bit because I think there was a question on EV, whether there would be consolidation. In fact, I was doing a session in SGX Academy with SGX Academy at the SGX Auditorium. So there were quite a lot of concern that there's an oversupply of EV in China. But when I was there in December, I found something that's very interesting. Although that I was only, there trying out the EVs for 2 days in two different cities. One was in Shanghai, the other was in Changsha, right? But I was there on a Friday and a Saturday, and surprisingly, I was able to try and to sit as long as I want in the showroom, all right, in the cars on display. Okay, so why is it that I was able to sit as long as I want in all the displayed cars was because there was not many people in the showroom. Okay, but this is only true for those unknown brands to me. Okay, those brands that I cannot even remember, those brands which are really small player in China. But when I went to Shanghai, and I was at Huawei showroom, I was at BYD. I don't even have an opportunity to try into those cars, okay, those display cars, because there was really many people there. So I think that there might be a consolidation in the EV in the near future. And those big names, those known names, right, they would stand out. So this was the reason why I got very interested in Xiaomi, because it's one of the known names. Okay, it has a huge brand following. It's the known name in China and also in many parts of the world. All right, so when they started manufacturing their new EV, all right, they're new in the industry, right? And they announced SU7 EV, there was very strong initial orders, and that's caused Xiaomi to move up. But I covered Xiaomi before the moves up from about $14 and that stock price basically exploded. So about 14, I did the video here, as you can see, and then it moves all the way up near to the $20 region, right? Okay. Well, again, one key thing to look out for technically is that the moving averages have flipped to become green color right now, and the recent correction from 20 now to about I think it's about 17 to low of 17. It's a correction towards it's about 1648 as of yesterday closed. It's close to the support level. Okay. Like a lot of people were thinking, right, at 20, should I buy or should I not buy? But if you look at right now at 16, 50, it's a correction, and it corrected to what I call a previous high here. So the previous high was, I'm not sure whether you can see the mouse, but it's around 1610. So this is a strong support, and with the flip and the moving averages, I think that one could be noting the support for a short-term trading. As I said, right, the general movement of Hang Seng and Chinese stocks they are still generally down, but Xiaomi is one of the few stocks that show an initial reversal. So if you want to be updated on Xiaomi, remember to go and subscribe to my YouTube channel, because that's where I cover a lot of stocks with DLCs. In fact, I only cover stocks with DLCs and SGX stocks. Okay. All right. Well, the last one that I want to talk about in line with Huanzi is BYD, and I just want to bring out this latest development here. We saw that BYD, two things technically. Number one, right? BYD didn't make a new low. Okay, it didn't make a new low, right? Why is that so? Because we saw the Hang Seng Index make new low, Hang Seng Tech actually also new low, and a lot of Hong Kong stocks, right? With China presence make new low, but BYD didn't. What I mean by no new low means that it's pretty much supported at the low point of 2022 to 2023, and then it hit the low at about 170. It's still there. Okay, so from technical point of view, this is seen as a positive sign. Why is that so? Because it means that investors are willing to come in to buy in at the previous low and are not too interested to let the stock fall too much. Okay, but that doesn't mean that it's going to go up. It's just that it didn't move to a new low. It doesn't drop too much, right? The second development would be around May, all right, this year, BYD announced its new powertrain engine that's combined the motor DC, that means the EV charge, plus a traditional engine that is a hybrid car, right? And this car with just one charge, okay, and one full tank, all right, it's able to travel 2,000 kilometers. Okay, and to give you a perspective, right, of how much is 2,000 kilometers, how long is that, right? What's the distance? It's from Singapore all the way to Bangkok on one charged, one full tank. Okay, so this is the new technology that's going to come up, and it's not long that's going to put it in the car. So as far as I remember, they would be putting into two cars. One of them would be seal. Okay, the one that I think is actually looking quite nice, and I might consider buying that. Okay, so did investors reacted positively? Yes, from that announcement, it moved up about, if I'm not wrong, about 17%. Okay, you can take a look at my video, so I covered that, right? And since then, BYD had also shown the flip in terms of the moving averages. That means that the green color moving averages came in, right? Short term is actually moving up. But long term, are there a lot of resistance to look at? Yes. That's why I still think that, if you take a look at the price movement of going up and down, then the support at around 220 would be a price, right, that would signal a strong support. Okay, so that 220 comes from a horizontal price levels as well as the low of that moving averages, because anywhere that's slightly below that moving averages, if it gets too low into, let's say, 190 or 200, it might not be a good sign, because it means that the positive news of this power engine, right, also no use. Okay, so about 220 to 225 would be the levels I'm looking at in terms of support level. And of course, that if it moved up, as I said, right, short-term trading, then the resistance will be about 255 and 270. Okay, so if you are looking at short-term movement, and if you look at say from the point of DLCs, then a movement from, let's say, 220 to 225 to 270 is actually a huge move, right, from the DLC point of view. Okay, so if you're interested to take a look at the video which I covered, Also on DLCs as well. That means that what are the DLCs that you can consider if you are looking at a bullish move in BYD, then do go to my channel, take a look at the BYD video. Now with this, I have ended my presentation. If you do have questions on what I've covered, then you can put them in the Q&A. I'll take that later on. And thanks a lot. I will talk to you later. Back to you, Alvin.
Okay, before Alvin starts, let me just
Hello.
mention something. Sorry, Alvin. But I missed out one thing just now. Okay, so at the
No
end
problem.
of the session, before after Alvin's present finish, we do have a Kahoot quiz with prizes to be won. So do stay tuned and listen to what the speakers have to say, because the speakers will mention topics that will be interested or involved in the Kahoot quiz. All right, so we will pick 5 winners of a higher score for the Kahoot quiz to actually give the prizes itself. We will mention more on mechanics later, but do stay tuned with us. All right. So if you're using a handphone, do note that you might not be able to see the questions clearly, but I will be reading out the questions for you to actually answer while looking at the Kahoot interface itself. If you're using computer, do get ready a phone for you to actually join in the Kahoot quiz together. Thank you. Sorry, Alvin. Back to you.
No problem. No problem. Okay. Thank you, Huanzi. Thank you, Binny. Hi, everyone. Good morning. My name is Alvin from UBS. And so I'll be sharing with you this DLCs, which Binny has already covered quite a bit. So I guess I will cover more from a product feature perspective, together with our product coverage, so that after listening to Binny and Huanzi's presentation, you probably will have some ideas on some of the stocks that are worth looking at in the coming few days or weeks. And then for some of them, if you have any bullish or bearish view, or if you have a stronger view, then you can consider investing in the leverage product on those underlying stocks, which is the DLC that I'm going to share with you today. And then we'll be giving out the $30 Grab voucher. And the questions, I think some of them are not that easy. So if you would like to get some of those vouchers as a token of appreciation from us, but you'll probably have to pay attention to what I'm going to share with you. So let me share our website first. So this is our web page. So first of all, the link is dlc.ubs.com. And as you probably know already, we are a product issuer of this daily leverage certificate. I think this DLC has been around for quite a while by now, maybe 6 to 7 years already. And you probably can find DLC on a lot of the Hong Kong as well as Singapore stocks, and also on the US indices as well. Some of the very bullish Nasdaq 100 index, as well as the DJI as well, the Dow Jones index. You can also find DLC on it. And but I guess what I will probably focus on today will be on the Hong Kong stocks, and some of the stocks that Huanzi and Binny have already talked about, especially for example, the EV sector, actually, as well as the some of the recent AI related theme as well. So I guess first of all is the fact that if we look at Q2, then the best performing stocks, I didn't prepare slides today, but in fact, if you look at the Q2, for example, from 1st of April to 24th of June, which is when I prepared this analysis, the best performing HSI constituent stocks is actually Lenovo. Okay, so as you know, Lenovo, they build PCs, and it's actually because of the fact that the recently we are always talking about the AI related devices, right? We are not only talking about just the AI and also the NVIDIA. We're also talking about the AI related devices, for example, smartphones, as well as the AI PCs. And because Lenovo is one of the manufacturers of these AI PCs, So that's why you can see that Lenovo has been going on a bullish run, especially from around end of April to end of May. But the whole Hong Kong market has not been doing so well in June so far. So that's why you see a bit of correction in most of the stocks, including Lenovo. So first of all, the thing is, okay, if you want to check out the DLCs on some underlying stocks, what you can do is to, on our website, go to products, and then you can see that there is this search function, right? And then you can just see if there is the underlying that you are looking at here. So if you do a search, you can see that there's a Lenovo, right? So you can see that there's these 5 times, Lenovo 5 times long, UB 250430, meaning that this DLC is going to expire in 2025 April 30th. Okay, and then so this one is a long DLC, the one below is a short DLC. So you see that basically all these DLCs are listed, and then you can just trade them as a stock. Okay, and then obviously each of them has a like an individual price, which is different from the underlying price, because the underlying is a Hong Kong stocks, while these DLCs are trading in Singapore dollar. Okay, and then if you click into it, you see that these, okay, RYQW is the ticker for this particular DLC. And then you see that the underlying 992 Hong Kong, just yesterday it was down a little bit. It was down by 1%. And because this DLC is a 5 times long DLC, meaning that you know, a bit of basics here, meaning that this DLC every day will perform 5 times performance of the underlying stock. So when the stock is down by 1.4% ish, then this DLC would be down by 1.4% times 5. Meaning it will be down by 6 to 7 ish, which is close to the performance of this DLC. As you see that this DLC that day was down by 7.3%. Okay, and obviously when you buy this long DLC, you're hoping that the stock will go up. So if the stock is going up by 1% instead, then you can expect this long DLC to be up by around 5%, right? So every 1% in the stock would be 5% in the DLC on a daily basis. That's the beauty of DLC. I think it's a very easy to understand pricing relationship compared to the underlying stock. All right, and then but do note that there are certain terms that are specific to like a DLC counter. For example, first of all, there's the fact that every DLC has an expiry date. But then I think most of the time you don't have to worry about too much about expiry. So long as it is not going to expire like very soon. For example, if you see that this expiry date is going to be 2025, then you don't have to worry about it, because I guess most of the time when you invest in DLC, you will not invest it for longer than a few weeks, probably. I think most of the time people would invest in DLC by either day trading or maybe just a few days of time max. Maybe sometimes a couple of weeks, but never like a few months. Based on our observation, and then one more thing is that this sensitivity here is that it's basically telling you that every $2.8 in the stock would trigger a tick movement in the DLC. Okay, so for this stock 992, the tick size is around 0.02, okay? But then for this DLC, you would need these $2.8 to trigger one tick movement, because this DLC is trading at a rather low price, and one tick in this DLC is quite a lot already in terms of percentage. So that's why for some of the stocks you probably would see that so I was going to share with you this actually for this stock. It's a 0.06 dollar movement would trigger one tick move in the DLC. So that's why when you see this sensitivity, this 6 cents would trigger one tick move in the DLC, meaning that it's just around 3 ticks of the stocks. So if the stocks take up 1, 2, 3 ticks, then this DLC will move up by 1 tick. Okay, so that's something that is worth noting. But I guess if you are not investing in DLC if you're not day trading, okay, you probably would not be too concerned about this metric. All right. And then I guess I would just like to show you one more thing. It's that DLC, if you day trade DLC, is 5 times percentage return, right? But then if you hold it for longer, so if we go to this section, historical compounding return, then if you scroll down, what you can do here, so we have built this tool to help you better understand how DLC works. And then here, if you, sorry, let me just the window a bit. So if you invested DLC here, so let's say from, we were talking about Q2, right? So it's from the 1st April to say the latest, right? So, okay, around here, 1st April, all right. And then the up to say 24th of June. Yeah, okay, great. So here in this period, the 992 Lenovo went up by 29%, which is already the best performing HSI constituent stocks in the same period. And then these DLC went up by 106%, which is a lot. And this is already after the cost that we charge. So we do charge a holding cost depending on the fluctuation of the underlying, depending on the funding rate, because DLC is a leverage product, and if you buy DLC, you actually you'll be subject to, you incur the cost of the leverage, because it's like you're borrowing money to buy this stock. Okay, but even after all these costs, these DLC still went up by more than 100%. But obviously, here is less than 5 times of the stock. And you may wonder, oh, is it because of the fact that we charge too much? So it's actually, if you do a 30 times 5 is 150%, but then this DLC is only up by this 106%, right? Oh, it's off by a lot. But it's actually, I can tell you, most part of it is not because of the cost that we charge. It's because of the compounding effect. It's because over the course of this 2 to 3 months-ish or period, the stock up and down and up and down. And then this is not in the favor of a DLC investor, because DLC is a compounding product, meaning that it's also actually a trend trading product. So if the stock goes up and up and up, you end up getting, I can say, exponentially more if you really are able to catch the uptrend. Okay, but Lenovo here is not that big of a trend. It's actually there was a bit of fluctuation in between, as you can see from the line below. Okay, so that's why in this case, the DLC is still up a lot. It's still up by much more than the underlying. So it's still with a big leverage, but it's just not as high as 5 times. So that's the case for Lenovo. But let me show you another example, right? So in this period of time, just now, I think Binny also mentioned Tencent, right? So Tencent during the similar period of time, and then, okay, first of all, let's pick DLC on Tencent. So if you go to Tencent, then you see that you have many more options that you can choose from, and then let's just pick these. So most of the time, if you we have already picked the best DLC for you actually by looking at this the sign here, right? So you can see that, okay, if you invested in these 10 5 times long, and what happened during the same period of time? So let's say here, because from around April to around June, okay, just roughly, and you can see that here the Tencent is up by more, right? So Tencent is only up by 24%, which is less than Lenovo. Lenovo was up by 29%, but then the Tencent DLC, also 5 times, was up by 133%. So you may wonder why, right? So that's mostly because of the fact that Tencent's volatility, you can say, or fluctuation during this period is less than Lenovo. So when you buy DLC for longer, it's fine. but you have to understand that if there is a more fluctuation in the stock, then chances are the DLC would tend to underperform a bit. But most of the time, if your direction is correct, then the DLC will very likely still give you a positive return with a leverage. Okay, so that's the big I guess the characteristics of a DLC that I would like to highlight to you. And so the best performing stocks in Q2 was Lenovo, and then also the other fact about DLC is that I think at the moment the highest gearing that we issuer can offer on DLC is still 5 times on single stocks DLCs, while we can offer 7 times on the index DLCs. Okay, so but I guess 5 times for stocks is about right. I guess for most of the stocks, you probably would find it enough, in my opinion. But if you want to hire gearing, feel free to let us know. Then we can pass the message back to the SGX. All right. And so let me see what else do I need to highlight. And then I guess one more thing is that I think if you compare DLCs with other leverage products out there in the market, for example, a structured warrants, I guess DLC, there are characteristics that DLC has, but structured warrants doesn't have. It's pros and cons, actually. I would not say DLC is always necessarily better, but then DLC, first of all, it does not have the implied volatility impact. There's no like a volatility parameters in DLCs, and then it also in terms of the holding cost. When I said you don't have to worry about too much about the expiry date, it's because the DLC holding cost is more like a linear cost, while for structured warrants, if you hold a warrant for longer, if you hold a warrant that is closer to expiry, then the every day the time decay on the product will also be larger. Okay, so that is another difference. But one more difference is the fact that the DLC has compounding effect, while I would say structured warrants do not have this compounding effect. All right, so that's the difference as well. And then lastly, I think if you have a bullish or bearish views on some of the stocks, and if you would like to get a DLC recommendation, feel free to check with Bini afterwards. And then, but if you also would like to try to just look around to see what DLCs that you may be interested, then you can check out our website. And then let me just show you how to pick a DLC just for an example, right? So just now we mentioned Tencent. Okay, let me use this. Xiaomi. It's easier to explain, I guess. So Xiaomi, if you would like to express bullish view by buying a long DLC instead of buying a short DLC, then you can do this. You can check daily long, right? And then you can see that there are 2 DLCs available, and then basically both of them are 5 times long Xiaomi, and then the expiry date is also not too short. It's going to expire only in 2025. Then you don't worry about too much. And then the only difference seems to be just the price, right? And yes, that's a very important difference that you have to be aware. So this DLC is at a higher price, while the one below is only at 1 cent. The one above is around 25 cents. And I can tell you that this one that is a higher price is a better DLCs, because DLCs, the price doesn't mean a higher price doesn't mean it's expensive. It actually only means that it is more sensitive to the underlying movement. Okay, because you invest, say, I don't know, like $10,000 in DLCs, then it doesn't matter what the price the DLC is, right? It only matters whether the DLC would provide you with 5 times performance compared to the stock. So that's the only thing that matters. If you buy the one that is at a high price, you end up buying less shares, yes, but it doesn't. And that's it. That's the difference. It doesn't mean that you'll be worse off. It's the other way around, because the higher price DLC is generally at a better sensitivity. As you can see here, this one above, you would only need $0.08 in the Xiaomi to trigger the 1 tick move of this stock. While the one below, you would need the 25 cents of the Xiaomi to trigger 1 tick move in this. And also, you can see that in terms of the percentage, then the bid and offer spread for the one below is actually much higher than this one above. So that's the thing that I would like to highlight, because for this one, only at 1 cent, 1 tick, which is 0.001, is actually around 10% already of this product. So it's a 10% bid and offer spread is crazy. So that is the reason why we launched another DLC. So to serve as a replacement of the one below. All right. So I can guarantee you that the one above is a better product. All right. So this is the last thing that I would like to highlight. I guess I have already covered it. And yes, and lastly, if you would like to get more DLC related info, you can go to our homepage and here, scroll down all the way down. You can see that there's a subscribe to our newsletter section. Just feel free to go to here to type in your email and to subscribe to our newsletter. We'll be sending DLC's update every Monday and Wednesday. So we won't send every day, just that would be a bit too much. We send every Monday and Wednesday, and then if there's any questions after today's seminar, feel free to call our hotline and email us anytime as well. So you can find our hotline here, up above here. So all right. So that will be the end of my sharing. I guess I'll pass it back to Hunter.
All right, thanks, Alvin. Okay, so everyone, before we move to the Q&A, like I mentioned just now, we'll be having the Kahoot quiz. All right, so my colleague will bring up the Kahoot quiz. So what will happen for the Kahoot quiz is that we have 5 prizes, each of $30 Grab voucher, very kindly sponsored by UBS. All right, for the top 5 winners of this Kahoot quiz. All right, so what happened is that for everyone that is in the audience right now, you can actually go to the Kahoot website under www.kahoot.it. All right, and then join. All right, then you can join through the pin of 2569062. All right, or you can scan the QR code if you are on a laptop and then you have a phone with you. You can scan the QR code to join through the for the Kahoot quiz. So the top 5 winners, all right, will actually have $30 of Grab voucher. So what you need to do after you win top 5 is that you need to screenshot your page to show that you're the top 5 and send to our email. Send to our email under the tj_team@phillip.com.sg. My colleague will put it in the chat box later. All right. So do remember to screenshot after you complete and win. Right. Load the winning page and then you screenshot and then send to us. Okay, so this is also a different approach that we do have. It's a new initiative, right? That's just suggested by Alvin regarding the Kahoot quiz to actually get more interaction for everyone, and also have some fun, right? Where we actually understand more about the UBS, the DLCs. Along the time, we actually also can get some prizes for ourselves. All right. So currently we have 20 participants, right? So we have 80 of us in the audience. So maybe we give each other like maybe 1 or 2 more minutes for everyone that want to join in. All right. So it's a very, very simple one. If you're only logged on the phone, right, you're viewing the Zoom on the phone, not to worry. You can just join through the Kahoot website first. What will happen is that I will be mentioning the options and the answer of the option. All right. In verbally, like I say, I will say red color is apple, orange color is orange. Right, then you all can click the answers also by listening to what I elaborate on. Because when on the phone, you only see the 4 different colors. You will not see the answer, the text itself. Okay. All right, so we have 25. All right, that's great. Right, more than 1/3 already. So maybe we want to see more people join in. Right, I think there will be a few more perhaps. Okay. So let me give the last few seconds, because now it's already 11:40. We'll start at 11:41. Okay, so Serena, do get ready to start. Right, so right now we'll be starting. Which of the following below is the best performing DLC underlying Hong Kong counter in Q2? This is the first question. Red color is Lenovo, blue is Tencent, yellow is Sunny Optical, and green is Meituan. I repeat again. Red color is Lenovo, blue is Tencent, yellow is Sunny Optical, green is Meituan. Which is the best performing DLC underlying? So we have 20 answers currently. We have, I think, 25, 26 participants. Right? Lenovo, Tencent, Sunny Optical, or Meituan. All right, so 14 of you get it correct. Right, so 8 of y'all chose Tencent. So the answer was Lenovo. Alvin mentioned during his presentation just now. Right, so prepare for next first. We see the ranking, see who's the first few. All right, we have FNX, we have some LCX and Ivan, WK, and CT. All right, next question. Question 2. What is the highest leverage factor of DLC you can have on a single stock? So red is 2 times, blue is 3 times, yellow 4 times, green 5 times. Red 2 times, blue 3 times, yellow 4 times, green 5 times. What is the highest leverage factor for your DLC single stock? All right, so almost all answered already. 24 answers in. One last one. All right. Okay. Almost everyone got it correct. 23 of you got it correct, all right? Oh, the rank have changed a bit. All right, Ivan is currently now in front. FNX is still there, number 2. WK is number 3 now. LCX number 4. And CT is still number 5. All right. Okay. Next, we have question 3. How long can you hold a DLC for? Red color is DLC is only for day trading. Blue is a few days. Yellow is 1 month. Green is generally short term, but you can hold longer if you know the compounding effect. Right? So red color is only for day trading. Blue is a few days. Yellow 1 month. Green is generally short term, but you can hold longer if you know compounding effect. All right. Oh, majority of you got it correct. 20. All right. So 1 month, I think you're confused by the fact that there was just now Alvin might have mentioned you may be holding for a few weeks or 1 month, but it's not really restricted. So you can hold for day trading a few days, 1 month, no issues, or even longer if you actually understand the concept of a compounding effect, like mentioned by Alvin just now. All right. Next, let's see the ranking again. All right. So FNX is back on top. All right. So Ping is now the second. CT is third. CT is on fire already, and LCX is 4, and WK is 5th. All right. So we have 1 dropout just now. Ivan has disappeared. All right. Next, question 4. Which feature below is not a DLC product feature? Red color, fixed daily leverage. Blue, implied volatility impact. Yellow, compounding effect. Green, all of the above. Which is not a product feature? Red, daily leverage. Blue, implied volatility impact. Yellow is compounding effect. And green is all of the above. This will be a tough one. This is the toughest one. Okay, we do see the score between them. So 4 is red, 12 is blue. Blue is the correct answer. So it is not a product feature, right? For the implied volatility impact, we have a fixed daily leverage that is confirmed by daily leverage certificate. We do have compounding effect involved, but there is no implied volatility impact. It's not a leverage through using of the options itself. Okay. Okay, so let's see the scoreboard. All right. Okay, FNX is still the first place. Anthony is now second. L6 is third. Hui Ping is still holding on at 4th. And now we have a new one called Chan at 5th place. All right, so now we will have the last question. Those do take note. Last question. And the first 5 do actually screenshot your screen. Right? Which factor do you consider for choosing DLC? Price for red color, blue sensitivity, yellow market making, green all of the above. Red color is price, blue sensitivity, yellow is market making, green color is all of the above. Right, so which factor do you consider in choosing your DLC? All right, okay, so we have 19 correct participants. Let's see if the ranking have changed. All right, it's quite exciting. Along the way, we do see the ranking change quite a few. Only the FNX was around all the way. So let's see if he's still the first place later on. Okay, so Hui Ping is now third. Second place is Anthony. And first place is still FNX. All right. Congratulations to the first 3. Of course, we do have 4th and 5th, L6 and WK as well. All right. So the 5 of you do actually screenshot and send to the email that we have put in the chat box itself. All right. Do screenshot and send to us in the chat box. Right, so now that we're over with this very exciting quiz, let's bring back Binny and Alvin, where we will now do the Q&A session. Okay, so I think there's some question along the way here, right? There's no upvoted ones. Well, so let's see. Okay, so maybe I'll let Alvin start first. Is it possible to play stop loss or take profit levels? Or actually, this is more of a platform, right? So you actually are able to place
Yeah, I guess.
stop loss order, stop limit order through the points platform. All right. For take profit, it's just a normal sell order that you want to place in, but it's not going to be locked in stop loss take profit level as per the FX trading, because in the stock market we are subject to the volume and actual queuing buyer and seller. So it's not going to be the fixed and locked in type of levels. So, but you can still queue in for stop limit orders and also for the sell orders for your stop loss and take profit levels. Just take note not to double sell will do. All right. Maybe I can bring Binny. There's one question just now I think you mentioned already on the EV too many, but there was a 17,200.
Yeah, I answered that as well.
I know,
Yeah.
but there's the next one. If reach
Oh,
17,200, we place buy order, but index drop, then what should be our next stop loss?
I think that I wouldn't just think that you should place a limit order at 17,200. I think that 17,200 you should be looking for some positive bullish signal. Then that would more confirm that the Hang Seng has reversed, because major trend Hang Seng is still down. So if say 17,200 doesn't hold, and I wouldn't want to answer where's the stop loss because that's a little bit more on the financial advice side. But if the 17,200 doesn't hold, then we should be looking at the next level, which is support level at about 16,800. So these are the two levels that short term you want to look out for rebound. Yeah.
Right. Maybe Alvin, you mentioned can DLC trade on a short selling? Maybe you want to mention about not to short sell DLCs. Same thing.
I guess the question is, what is the benefit of doing so? Because, if you short sell a long DLC to express a bearish view, then you might as well buy a short DLC instead. But I guess, okay, there may be times that if your short DLC does not provide you with a good enough sensitivity, then sometimes we may see some investors do a intraday short selling on a long DLC to express a bearish view. Yes, that's doable, but then just have to be aware that if at the end of the day if you still have a unsettled position, then you have to enter the buying market 2 days later, and most of the time you'll be worse off if you need to enter the buying market. So I guess that's the thing to note. But if there's any buy-in request, most of the time we try our best to facilitate by providing inventory in the buying market. But I guess generally we would not recommend people to do so, because there's just no point to do it.
All right. Okay. So there's a question on Binny for Alibaba. Maybe while Binny want to get to that. Maybe next one is Alvin. How the liquidity of DLC on a particular counter are managed for liquidity side?
So actually, if you see that first of all, you can try to compare the liquidity that we provide by looking at for example, let's say if we are quoting 1 million size, 1 million units on a say $1 DLC, then we are effectively providing like a 1 million Sing worth of liquidity on the DLC, and that will be actually 5 million if it is a 5 times DLC. That would actually be 5 million Sing worth on the stock, right? So you can then compare the stock, whether the stock itself has this much liquidity on the first level of the order book. And I guess most of the time, for some of these, all these blue chip stocks, you probably see the liquidity in the stock that is actually more. But do note that even if you take the entire size of our bid and offer, we'll still refill our order in probably within less than 1 second. And so that's why our actual liquidity is more than what we're showing. It's actually ultimately what we can show is basically what is there on the underlying stock. Because what we do as a product issuer, we sell the DSC, we buy back the DSC, and then we source the liquidity from the underlying stock itself. So and then if say the liquidity that we were taken is more than the underlying level, then we might have to adjust the pricing on DSC a bit by moving up or down by one or two ticks. But that's all fine, so long as there's enough liquidity in the underlying stock. So ultimately, it all goes back to the underlying stock.
All right, thanks, Alvin. So, Binny, you ready? Or
Yeah, I will share my chart
the screen?
on
Yeah.
Alibaba. I think all of you should be able to see it. Actually, I'm very, very familiar with Alibaba because I've been monitoring this. So this is the weekly chart, as I mentioned. Oh, a lot of Hong Kong stocks, right? They are all in the major downtrends. I mean, we can see very clearly from the moving averages. But one thing to mention is that Alibaba do its the recent 2023 to 24, right? 2024, the downtrend is sort of like smoothing out. It's slowing down, but it doesn't mean that it is not down. Okay, so that's one thing. Second thing is that it doesn't mean that it cannot break its lowest price here, which is about $60. We've seen that happening to many other stocks, right? Where after some consolidation, price continue to break lower. So these will be the 2 points I want to bring out from the weekly point of view. It's very clear that it is a down. And if you are asking me about Alibaba, as compared to Xiaomi or compared to Tencent or BYD, right? So technically, it just doesn't look very well. There was quick bounces, that meaning that price moved up, but still it's really very weak. So to me, either one would be looking at the major support level at 65 or $60 to pick low. Hopefully that it can bounce up. But otherwise, if you're looking at the short-term bullish view, Alibaba doesn't have that. So it's more like looking at very strong levels and hope, right? Finger crossed that it might bounce up, or otherwise to wait for price to move higher to establish some uptrend, with a flip in terms of moving averages again. But otherwise, the trend is still down. All right.
Right. So let's move to the more generic question on the economy also. So there's one question on when expected the Hong Kong and China market to hit historical high. So I think like what Binny mentioned, you can see that actually the trending downwards is actually throughout the Hong Kong market. So I don't think you'll be looking at a historical high anytime soon. All right. So I think you asked it because US is at a historical high. So of course, we wish that Asian market can reach that, but unfortunately, right now our environment unlikely supporting this scenario. But it's more of the fact that whether Hong Kong and China can have a rebound up, maybe to actually benefit of the overall global economy. But do note that there is the backdrop of the tariff, your trade wars, and also even the US election that might actually affect the volatility. So I think in terms of a general bullish full year bullish performance, I don't think it's that likely. More of a sideways swinging towards second half of the year and more of specific stock performance, which is why we actually mentioned about the tech giants, which I think usually investors globally are actually interested in more of the individual stock pick within Hong Kong, right? And you can actually use the DLC to support your view on these individual counters as well. All right, so next one we do have one is notice that HSI and Hang Seng Tech usually start the trading day session strong, right, up 1% or more, but the end of each day gains are usually eroded by the trading day progresses. Any explanation for that? Okay, so this is going to be a very weird one because Hang Seng HSI Hang Seng Tech usually they are holding up is more of due to or rebound up due to the correlation effect of the US market, right? Because a lot of them are listed dual listing in US and China. So some of the great performance of the tech companies in US actually bring over this positivity sentiment over to the Asian market at the start of trading day, especially if the US market have a very big spike. However, in the Hong Kong and China market itself, during across the day itself, when as it went up already, you will see actually a lot more take profit sentiments, right, which actually pushes the prices back down because of the fact that people are trying to flow the funds out of the China Hong Kong market. So this is one of the issues that might be facing in terms of the general market. But in terms of individual counters inside there, you can see that actually some of them do release to outperform within the index itself. All right. Okay, technical analysis, I think Binny mentioned already. Let me skip this one. Okay. Should we give more higher risk premium when investing into China or Hong Kong market, given uncertainty regarding government policies? I think generally most investors already place high risk premium on the China and Hong Kong market, so it's very, very, very normal. The fact is that you're not placing more risk premium purely for the country's sake, but it's more of the fact that you're placing more risk premium on the potential possibility of government's intervention. So that's a view they should take. So it's like you have different risk factors. So some of the countries have different factors involved. Some is just government intervention, some is currency issue, some might be the interest rate, or some might be the individual company being over too strong. So for example, if you say China is due to government policy, I will say countries like South Korea and Japan, right? South Korea is more of individual companies being too strong in the market, like Samsung actually leads the whole industry or the whole country, and then your Japan might see different results due to the currency impact. So even different countries have different risk premium to consider, right? All right. So okay? Maybe Vinny want to share one or two more of the charts. If you see, I think there's one client that actually plays a lot of counters. Maybe you can see which one you actually do monitor, and you can want to mention. Okay, so let me see. Any other questions on DLC itself? Okay, also raise. All right. So next, what is the forecast on China A shares? Currently for me, I see that there's a lot of interest or very strong intent by the government to actually push the economy up. So personally, I'll review based on whether or not you can see the property sector recovering. If you can see a general recovery on the property sector, then there might be a general shift towards a overall bullish trend in China, because the property sector actually does support a lot of underlying sectors across board. So if the risk of a property sector meltdown is lower, then it might actually boost the overall sentiments up a lot, especially for China A shares. Okay, are Chinese EV companies profitable? If you're talking about pure EV companies, no. If you're talking about those companies that are relying on the larger companies to produce and also they are hybrid nature, right? So meaning that they're not pure EVs, they are both traditional and also the EV car makers, then those are actually still profitable. All right. And even for Xiaomi, for example, they don't produce their own cars, right? They have their own production line, but they do also get support from other larger firms for certain segments of their production itself also. Okay. Right. Okay. So maybe Binny, you're ready to share on.
Yeah. The one that I mean, I like to diversify, so I think I presented quite a lot on tech stocks, right? So there's one which I think we probably want to look at if should the Chinese and the Hong Kong market rebound, and that's the Hong Kong exchange. Now, a few things in policy that they are changing right now. So it went up recently because of the arrangement, the cooperation with the Saudi Arabia to launch the ETF. And I think that for so long, finally, they are not, they are allowing to still trade during typhoon season. Is that good news to you, Alvin, to trade during the typhoon season? All right, but technically,
I guess so. Yeah, more trading is always
more
better.
trading, but you have to work. You can rest during typhoon season, right? But technically, one of the things is to bring out is that I like stocks that doesn't break new low. Okay, so this is one of the sign that there are still people, investors coming in to absorb at that low point. Okay, so it's not good technically if stocks break new low. So this level here, which is about 220, or rather 216 to be a little bit more precise, I would think that's about 210. was and is that low point that have been holding quite well. Okay, so if you look at stocks, and if you look at the current price about 250 to the low of 220, and that's probably like $30 difference. If you look at the high of 588 to 220, that's really a correction of like 50%. If you look at the current price to the high price, then and the current price to the low price, then in terms of the reward to risk ratio, this is something quite positive to me. But if you ask me long-term wise, weekly chart has it reversed, it's very clear it is down. If you ask me, on the day side, has the moving averages flipped? Yes, it has. It's shown a little bit more of a flip side, but it hasn't rebounded. So this could be something that you want to take note of. Should price rebound and moves up again, and then you probably be looking at the a risk of it if it failed at 210, 220. Okay.
All right, thanks, Vinny. Okay, so we actually reached 12 o'clock, so I'll maybe touch on the last question before we move to end the session. All right, so one of the questions is how problematic is the escalation of the trade tariff, especially on those imposed on the Chinese EV? Right, so just to clarify also, what I mentioned during my segment, the China tariff onto the meat is not yet imposed. It is a review from the Chinese government side, all right? So that they're looking to impose, haven't imposed. So they are looking at the potential impact and also whether or not is warrant imposing of the trade tariff. I think more of a threat to the Europe side, right? EU side, that you give me this tariff on my EV vehicles, I'm also threatening you with another tariff. So just a way of geopolitical how they navigate themselves. All right, and those imposed on the Chinese EVs, definitely there's an impact, right, in terms of the sales itself as for the smaller companies, because the small companies might not be able to sell to those countries as well when their prices are not as competitive anymore. But do note that for Europe side, they are very strong purchaser of EVs. And actually, within the Europe and also the US supply, they might not really cater to the demand. So in a sense, even with higher tariff, there will still be sufficient demand pulling from Europe to buy Chinese EVs, just that they need to pay more. And who is going to pay the extra more? The EV companies might actually pass the buck over to the consumer themselves if there's sufficient demand. So it really depends. And do note is that the recent what I read on the EV, I'm not EV driver myself, but what I read on the EV market is that in US itself, after Tesla's new all the update and stuff, there is a spate of issues. Need a lot of the vehicles going to do repairs, and there's a bit less of these issues in the main producing companies in China, like BYD and the General Motors, and SAIC, their segment in terms of the EV. So in terms of reliability, which actually is very, very strong in the minds of the Europe companies, the Europe consumers, there might be still a very strong shift into these high-tech EV companies from EV cars, from China itself. So to me, the impact might not be as strong as initially expected. But this is just a start, potential start of a trade war, which actually is the main concern, not the fact of the actual tariff itself. All right. So I think we have a very, very interesting session today. And I thank everyone that spent the Saturday morning to noon with us. And I hope everyone have a great weekend ahead. And I thank Alvin and Bini once again for joining us today to share with our clients itself. Right. Have a great day, everyone. Thank you.
Thank you. Bye-bye.
Thank you. Bye-bye.